Number 1. If you're using TradingView on a small screen like a laptop, try the zoom out feature of your browser. This makes those important support resistance visible, which otherwise would have been missed. Now you can't blame your screen size after a loss. Number 2. Don't increase your blood pressure by continuously watching prices move toward the stop loss. Use Investing.com's mobile app to create free price alerts. Now your blood pressure will only go up after you receive a notification. Number 3. We have seen how bad the Fibonacci indicator is for entries, but it can be used as a simple percentage tool to filter late entries. Plot the tool from swing high to low in an uptrend. The long entry below the 33 Fibonacci level is pretty good, and below 50 level is decent. Number 4. When King George II couldn't identify where the price was moving, he used the regression trend tool on TradingView. He placed it on the price like this and saw that the price was trending this way. If the angle of the channel is up, it's an uptrend. This is a downtrend, just like the account balance. This is a sideways or range market. Number 5. When multiple time frames are trending in the same direction, trading setups are more likely to make money. We have data, so use Trading Rush Trend Finder tool to quickly see those high-quality setups for free. Number 6. Candlestick patterns are pretty useless at random places on a chart, no matter what your neighbor says. They are more reliable near support resistance and other important price levels. Number 7. Recently, I made the highest profit in my trading journey. I dumped everything in the market crash and found God. But the app that helped me most was the free Apple Stock app. It has the best price widget I've seen so far. It literally takes 2 seconds to check if your favorite chart has moved up, down or sideways. Number 8. It might come as a surprise, but divergence doesn't really work for entries. In my experience, divergence simply means the price is saying one thing and the indicator is saying another thing. Just like when a YouTube thumbnail says, Fed just crashed the market, but the market is moving up. Divergence is like a clickbait video, but instead of an entry point, I find divergence more reliable for exiting trades and booking profits. Number 9. If the candlestick colors are alternating too frequently, indicators such as the MACD can give false crossovers. This is because the price movement is not clean. Number 10. TradingView charts are not just accessible on TradingView.com. Investing.com and other sites also host them. These charts are slightly different, but also have some paid features for free. Number 11. My neighbor's dog once said RSI overbought and oversold zones are pretty misleading in a trend. Overbought in an uptrend doesn't mean overbought, and oversold doesn't mean oversold in a downtrend. That's because people's interest in the trend direction is generally higher. Number 12. If you confuse yourself by drawing support resistance like this, use the Renko chart to smooth out the weak reversals. Use a rectangle drawing tool instead of lines to make everything look cleaner. Number 13. The best time to trade Forex is during London and New York sessions, especially the overlap of 2 sessions. The best time to trade momentum in the stock market is near the market open. Crypto can gain momentum when Elon Musk tweets, so it's a good idea to keep Twitter notifications on. 14. If a stock has too big volume spike like this, it can mean that the average volume is low. Price action patterns can be less reliable on low volume stocks. Number 15. I started and traded on smaller time frames for thousands of hours. One of the things I have learned is that indicators work better on higher time frames. The same applies to most technical strategies. Number 16. Here's a big myth I heard many years ago. If the price reverses 3 times from support, that support is now weak. With that logic, if I punch a European brick wall 3 times, it's going to become an American wooden wall. Doesn't work like that in my experience. Support can stay strong support as long as there is a higher buyer interest near it. Number 17. If you are new to trading, you might survive the markets better with a lower reward-risk ratio. High ratios have low win rates. That's going to affect your trading psychology and you will quit trading before you quit smoking. Number 18. Sudden big moves like this one are not normal. They are usually caused by the news and can look like wicks on higher time frames. If you draw support resistance at the tip of them, they probably won't work. Number 19. When the price breaks out of range, it doesn't always mean a breakout. Even market noise can result in a breakout. Good breakouts are the ones that are clearly visible on multiple time frames, but then we have data that says most breakouts fail, so probably good to avoid them. A pullback entry near breakout works though. Number 20. You know how some people try to predict the news direction? I did that once or twice as a beginner, didn't end well. Around 1 hour before the US stock market opens, there are important news events many times. They can make big random moves to trigger your stop losses. I would avoid trading near it if I were you. Number 21. My uncle always forgets that there is a way higher probability of making money buying the stock market index than predicting its crash. Reversal trading can be more difficult than trend trading. Number 22. Price levels with multiple zeros can act as invisible support resistance, better known as psychological levels. This happens because most people put their orders at zeros, maybe because most people can't count above zero. Number 23. If a predictable news event is positive, the price can react negatively. King George Part 3 once said that most money is made by predicting future events and not by reacting to them. If a future news event is predictable, the probable outcome of that news is most likely already priced in. When the news comes out, smart big money books profit. Price moves in the opposite direction, and dumb money loses money. Number 24. We have data that says a 1.5 to 1 reward-risk ratio is the sweet spot for trend trading most of the time. It gives good profit with a good win rate. Number 25. If you struggle to filter the range market, use the long-term moving average and check if the price crosses it multiple times. Price does that in a range. Or simply use the Trading Rush moving average I made for free.